Hey guys, welcome back to the channel. Today I'm going to be analyzing Ergo and going over my thoughts on the price action. So if you are new to the channel and you want to show some support, please leave a like and subscribe. So on my chart, I have this green moving average. It is the 50-day simple moving average. I also have this red region here that I identified in my last video, and this custom-made indicator that color codes the price difference between the closing price and the 50-day simple moving average. So I'm going to go over the 50-day on this Ergo USD pair and then go over this a little bit later in the video. So I'm going to minimize this window and talk about this now. So the 50-day simple moving average is very important, and what you want to see if you are a bull is for price action to be above this, because when we are below it, as you can see in November, we rejected off this, and we rejected pretty harshly. That led us to new lower lows, and we had another rejection in March. This one was short-lived. As you can see, we reclaimed it and actually had this move above the 50-day simple moving average. However, this was all short-lived because we were unable to hold it as support when we came back down to retest it. So we fell through it, and now we are pretty far below it. As of this moment, the 50-day simple moving average today is at $3.17. But it is going to be continuously moving down because the closing price today is far less than it was 50 days ago. So if we were to go back 50 days, we can see the closing price was at $4.80. So we're replacing closes at $4.80 with closes at $2.46. So that means it's going to continuously move down, and price action is probably going to retest this sometime in the near future. And I think that'll be a very key moment for Ergo, right? What we want to see is for price action not to reject like it did in March and November, but rather reclaiming it and holding it as support. We don't want to just get above it and have something like this. We want to come back down, hold it as support, and then trend higher. And that's really the key, right? Because if we don't hold that as support and we fall right through it, that's even more of a bearish sign, because it shows that bulls were unsuccessful in kind of defending that level. Also, in my last video, I covered this key level from $3.80 all the way up to $4.10. This entire range here being a key support and resistance area because of the price action in February and April of 2021. This was a key moment where we had this double topping pattern, and we were able to pick ourselves back up, holding the 50-day simple moving average as support, and that led to this phenomenal run here where we rallied all the way up 380% in just 10 or so days. And then we came back down, held it as support, and formed this ultimate double top. So now that we are far below this, in my last video we were right around here. It was sort of a question whether or not we would hold it, but we have since broken down. What we would like to see is for price action to get above both of these levels, both the 50-day simple moving average and this key red region here, so that price action can start reclaiming some support and holding some higher levels, because otherwise we might have to retest some of these lower levels that were formed back in earlier of 2021. And now I'm going to go over this custom indicator that I created. So it is going to be taking the percent difference between the closing price and the 50-day simple moving average. So it color codes it based on how extended we are both to the upside and to the downside. So when we're really far above it, it's going to plot it in red and yellow. These red, orange, yellow colors correspond to when price action is very far above the 50-day simple moving average. And then on the other hand, these blue colors correspond to price action being very far below the 50-day simple moving average. So as you can see, we're in the blue color range because price action is below the 50-day simple moving average. And each time we were at this blue region here, for example in July of 2021, right here, that led to a retest of this 50-day simple moving average. So you can see how when we reached this blue color range, we picked ourselves back up, and then we went back to retest it. And this test was successful because we broke through it and trended back up to this high here. In October, on the other hand, though, when we did reach this blue area, we did retest it, right? That's the key. We retested it, but we held it as resistance, ultimately leading us much lower. And then we retested it again. So now that we're back in the blue, I would expect us to, in the near term, retest this 50-day simple moving average. And whether or not we are able to reclaim it will be, in my opinion, a significant dictator of the implications on the price action over the next few months, right? So if we are able to reclaim it, that's a very bullish sign, especially if we can hold it as support and start trending back up using that moving average as support each and every step of the way. However, if we reject, I would expect price action to at least retest some of these lower levels, such as this March 2021 low, and potentially some of these earlier on candles where there's very little price action. So that is the end of the video, guys. I hope you did enjoy, and as always, I will see you in the next one.